In today's video, I want to teach you a very simple but powerful trading strategy that helps you to make profit consistently. This strategy is a swing trading strategy, and the time frame that is used is 4 hours time frame. So here we set the chart time frame on 4 hours. This is the price chart of euro to US dollar, but no limitation on this, and you can use this trading strategy on any other asset or market, whether it's Forex, crypto, or stocks. In this trading strategy, we use 6 moving averages with some special settings alongside with stochastic oscillator. To add them, here we click on indicators and we search ribbon. This one. Moving average ribbon, which is a built-in indicator on TradingView platform. We add 2 of this because we need 6 moving averages. And instead of adding moving averages separately, we use ribbon because it's easier to manage them here in one place. Alright, for the first ribbon, we need 3 moving averages, so we remove one of them. 3 of them should be simple moving averages, which by default they are set on simple moving averages, and 3 of them should be set at 72. So here we set 72 for them. For the first one, the method of calculation should be based on HLC3, which is actually high plus low plus close divided by 3. And for the second one, it should be based on high. And for the third one, it should be based on low. And finally, we change their color to blue. Alright, now as you can see, we have a blue channel on the chart following the price action. Now we should change the settings of the second ribbon. Similarly, we remove one of them because we need 3 moving averages. 3 of them should be exponential moving averages, so here we set EMA for them. 3 of them should be set at 12, so here we set 12 for them. Similarly, for the first one, we set it at HLC3, for the second one based on high, and for the third one based on low. And finally, we change their color to red. Alright, now we have another channel, this red channel, which is more sensitive and following the price action more closely in compared to the blue channel. And the last indicator that we should add is stochastic, this one. And we should change its settings. Here for K% smoothing, we set it at 3. Alright, everything is already set on the chart, and let's see how we trade based on this trading strategy. Please keep watching this video until the end because I will mention some important points which without paying attention to them you will not be able to successfully run this strategy in practice. Alright, this is a trend following strategy and we try to enter in the pullbacks. So the first thing that we must identify is trend. When the red channel is completely below the blue channel, the trend is down and we look for selling or short position opportunities. And on the other hand, when the red channel is completely above the blue channel, the trend is up and we look for buying, or in other words, long position opportunities. Please pay attention that when the channels overlap, we don't enter any trade. So we start trading when they are completely away from each other, which means the red channel is completely below the blue channel, which started from here and lasted up to this point. Or on the other hand, it's completely above the blue channel, which started from here and it lasted up to this point. Alright, now let's see how we discover trading opportunities. As I said, when the red channel is completely below the blue channel, we look for short position opportunities. In this situation, we wait for the stochastic to go above 80, and when the K% line, the blue line, crosses below the D% line, the orange line, it's a sell signal. In other words, it's a signal for opening a short position. So we can enter a short position here at this point. The stop loss for this trade is placed above the previous swing high and the profit at 1.5 risk to reward ratio. Alright, moving on the chart, while the downtrend condition is still valid, we got another short position signal here where after being above 80, the blue line crossed below the orange line. So we can enter another short position here at this point where the new candle is opened. The stop loss similarly placed above the previous swing high and the profit at 1.5 risk to reward ratio. Alright, moving on the chart, from here we have overlap. So So when we have this bearish signal here, it's not accepted and we don't trade in this situation. From here, the red channel is trying to go above the blue channel to form a reversal to an uptrend. We didn't have any false signals here in this range market. For example, here when the red channel is completely below the blue channel, we didn't have any bearish signal, and here it was overlap. And here when the red channel is completely above the blue channel, again we didn't have any bullish signal, and here for this one it's a overlap. You can see that our strategy is performing very well in this range market, which is actually the reversal point of the market. From here, the red channel is completely above the blue channel, and it seems that the uptrend is establishing. In this situation, we look for long position opportunities, and for discovering trading opportunities, we wait for the stochastic to go below 20. And when the K% line crosses above the D% line, it's a buy signal, so we can enter a long position here at this point when this new candle is opened. The stop loss for this trade is placed below the previous swing low, and the profit at 1.5 risk to reward ratio. Alright, while we are still in uptrend situation, we got another bullish signal here, so we can enter another long position here as this new candle is opened. And this trade is also a successful trade, as you can see. Alright, moving on the chart, here we have overlap, so this bullish signal is not taken, and here for this bullish signal, when it was happening because the red channel was above the blue channel, so we could enter another long position here as this new candle was opened, and this trade is also a successful trade, as you can see. Alright, moving on the chart, not any signal around here, and from here overlap, and from here the red channel went below the blue channel, so we would wait for bearish signal. You can clearly see that this strategy performs very well in range markets and in areas of the market that a reversal is happening, and we didn't get any false signals in these situations. But this doesn't mean that it generates 100% guaranteed signals. Just like any other trading strategy, this strategy also may generate false signals, and losing trades are part of the game, so you need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it's a perfect choice for active trading. I have a complete guide on this. The link is also placed in the description of this video, and I highly recommend you to watch it because risk management is one of the most important factor in your trading success. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.